Paper whales, June 16, 2026. The Dow closed green today. Before you feel good about that, it was the only thing green. The S&P dropped over 0.5%, the Nasdaq got hit over 1%, and the VIX quietly ticked higher. That's not a rally. That's the market rotating into things that don't need rate cuts to survive. Here's what actually happened today. The Fed wrapped up its June meeting and held rates steady, which was the expected call. But the dot plot and any hawkish lean in the language was enough to spook growth names. When the Fed even hints at higher for longer, tech gets repriced fast. Nasdaq down over 1% on a Fed day while the Dow closes green tells you exactly where the stress is landing. High multiple tech and growth. Financials, industrials, and energy held up because they don't need rate cuts to make money. Banks love stable margins. Caterpillar doesn't care about the dot plot. That's the rotation. On the winner's side, JP Morgan up 1.8%, Goldman up 1.3%, Caterpillar up 1.4%. These are the boring names that work when the Fed stays put. On the loser's side, Nvidia down 3.2%, Tesla down 2.7%, AMD down 2.9%, Shopify down 3.5%. The chip trade and growth complex took the hit. Tonight's setup is JP Morgan. Entry zone between 327 and 330. First target, 342. Second target, 355. Stop at 320. The thesis is simple. A Fed that holds rates is a gift to bank net interest margins. Today's outperformance in a down tape wasn't luck. It had a thesis behind it. Watch the 10-year yield reaction at tomorrow's open. That's your leading indicator. Wednesday is the real event. Powell's press conference, not the rate decision, that was already priced in. His tone on cut timing and the dot plot path is where the actual volatility lives. If you're not sized for a binary move before Wednesday's open, that's the first thing to fix tonight. Set your alarm. Full Paper Whales issue is at paperwhales.beehive.com. Free to subscribe. Link in bio. See you tomorrow.